The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, Friday, December the 27th. Don't forget, straight after my show comes Nico and Paige. Great program on health. Probably one I should have been listening even more tentatively to. And new all-time highs today, but I know this is going to be very, very surprising. As I'm talking to you right now, at 11:07 on a Friday morning Eastern Time, the Dow and the S&P are actually lower. I can see red. I had to rub my eyes. I had to check it out. It is red. The Dow is down 13 at 16,466. And I said to subscribers this morning, when I sent out my Dow chart, that I anticipated that there'd be a lot of resistance in the 16,490s to the 15,020s. Well, where did we go? We're into 16,529. And now we're reversing. And I normally would say I'm pretty sure that we're going to have a down day on Monday to make a peak B. But there are a lot of factors that are going on here. Look at this. 9 candles. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles. And the most interesting thing about it is, within the 10 candles, there have been 3 doji candles. One was just slightly black. I think the Dow was about -9 on that particular day. What day was that? That was back on the 17th of December. So the power of the white candles in this case, usually I have green and red, but yeah, we'll treat them as white candles. And the power of the volatility index to show, make it real simple, buying pressure. And the fact that when you're in the 11s in the volatility index, you're starting to get to a baseline of support, says that there should be some breather taking place. I had said that it should be yesterday into this morning. No, I was wrong. Yesterday was triple-digit gainer for the Dow, so it's today possibly into Monday morning. Now, there are a couple of things. Should I be talking about this not as leg B, but as a continuation pattern of leg D, and this is really an E? Well, in the pattern that I look at in my CD introducing the Chapman Wave methodology, there's a pattern that I call the cup and ladle. It's a breakout. I talk about it in slide 461. What's very important about this is that the quicker you break out and close above the left side in a cup formation, the greater the chance that you've got a Chapman Wave cup and ladle breakout that goes to at least a D. I have no reason why I should not stick with that, with a stochastic at 96% and the MACD still expanding. All right, so that's that. Now, let me just run the numbers because there are a chunk of things that I want to do right now. I want to do a couple of things because I heard Tom talking with Ilka from Boston about real estate. I wanted to add to that, especially since I'm in the Boston area here in Newton, and also that I followed my wife particularly, but we've both been following the Brooklyn market for a very, very long time, 7 years at least. And I must say, I'm pretty sure that, although it's not my wife's, it's her avocation, certainly not her vocation. She must know just about every single property that's available there. I even got an email the other day on something that was going, there's absolute hubris and chutzpah going on. I want to talk about it, especially there's one piece of property we saw. Very nice, etc., etc. It comes with someone who's been there for about 30 or 40 years, since she was a little girl, and no one really knows what she's been paying. Maybe $900, maybe $500 a month. Nobody really knows. Nobody knows what kind of contract it is. This is where I'm starting to see absolutely risky property. So the guy nobody's supposed to know this, but he buys it for 600 and something, and he's trying to sell it for 1.5. It's a 3-bedroom, and it comes with this particular person who you're going to have to either evict or give her a break. I mean, unbelievable. I'm seeing so many properties that are on the hazardous to your wealth list. I'm real suspicious about what's going on at this particular point. We're going to talk about that in a moment. Let's just get to the numbers. The Dow is down 14 at 16,465. The S&P is down just over 1 at 1840. The comp index is down 7 at 41.59. You've got gold up $3.40. You know, a dollar had a huge hit this morning. It's come back a little bit. Euro broke to a leg E. You've got... this is very interesting. I still believe that gold is getting ready for a nice bounce, but to me, the major trend is down, and I see nothing to change that. Silver is up 12 cents at 20.04. Platinum's at 13.74. High grade copper is now down a little bit at 3.39, down 80 cents. Let's see, we actually did. Folks, for those of you who get my opening call, I made a mistake. I just been trying my very best to, because it's such a quiet period. We got some great stocks, missed some great stocks too, but we got some great stocks. One even saw this morning, someone told me it was maybe a short squeeze. We bought it at 6.38 and it hit 11 something, 11.50, 11.40 this morning. I just, let me quickly see something here. I just wanted to see this because it's kind of important. Of course, I can't find it right now. Why am I having trouble finding it? Very nice. We actually bought, so folks, for those subscribers, I made a mistake. We did actually, it must have happened right at the end of the day, and for some reason I just didn't update everything. But for number in today's opening call, number 15, we are long. We're long at 2 and it's trading at 207 right now. So keep that in mind. Now, I've got a couple of questions, quite a number of questions, both emails and in the den I want to get to. I want to talk a little bit about real estate. I want to also talk about the IYR, which is the iShares Real Estate Trust, is commercial real estate. So let's do this. We've got the dollar trading at 80.32 right now. It's down 32 cents. And I'm going to go running right into the questions first. I want to do that because this is Technical Friday, where we get a little bit more into detail with the Chapman Wave. That's number one. And number two is the questions that come up maybe later with callers, so I don't want to run out of time. LVS was my first question. Chris wanted to know, she has F in the daily chart of Las Vegas Sands. 100% correct. That's what I've got. Now, I'm also going to say I've got leg F at 78.52 right now, LVS trading down 21 cents. I am quite prepared to consider that there could be an alternate count with a B. I'm calling it F because the MACD turned down and then crossed negative. But very often what I've seen, especially in this particular phase of this particular mega bull market, is that if at peak D or E, the MACD turns down and just barely crosses negative and then flattens out, that can also allow it to recycle higher. And the stochastics at 84%. So yes, it has a lower high bar with worsening technicals, but the technicals technically are still quite good. The weekly's in leg D and the monthly's in leg D. So I'm going to suggest, if you're I believe you're in Las Vegas Sands, I wouldn't be considering any short. I wouldn't even be considering exiting right at this particular point. Let me just quickly do the 120-minute A. So that's B. Just a tad to C and D, and that's maybe E and F. Yeah, I'm going to make a suggestion that says give it just a little bit of room because it's still on the buyer's list. In other words, it's participated in this rally and participated very nicely, number one. Number two is it would have to crack 77.20, probably 76.83, and that would confirm for me that that was a peak F. I'd give it just give it the day, give it into Monday by noon, and if it hasn't taken out 78 as a 78.55, I'm going to suggest, well, no, I should say if it hasn't closed underneath 2 days ago, 78.01, yeah. If it hasn't closed under 78, then I'm going to suggest keep holding it because it could have a couple of recycles to the upside, like a number of stocks here. So I like it. I've got it in leg F, but I am actually going to put it in right now. F is the one I have to go with based on the fact that it did pull back with the MACD just barely crossing negative, and the stochastic was weaker, but the stochastic's still at 84%. So I'm going to call it F/B. Remember in the Chapman Wave methodology, your objective is to do the very best you can to try to make sure that the last wave counts, either up or down, is one you feel secure with. If you don't feel secure, you can have either an alternate count, or what you will do is you will say to yourself, I need to wait for one more peak or trough if it's going to happen. If it does happen, it clarifies it for me. And if it doesn't happen, that also clarifies it for me. So give it just a little time, have patience. I still like it. I think it's one of the participants in this mega bull, and it is acting just like the market right now. So I think that is worth keeping it. Now, here's the other thing. So that was LVS. Next one was CLF, Cliffs Natural, is that, or Cliffs Resources? Cliffs Natural Resources, Inc. Strong leg B in accounts trend moved to the upside. Stochastics at 63%. MACD's just turned up. Now, I've been fascinated with this. It is the weekly chart that was looking good. In a left side, right side price moved back towards a very ugly candle. CLF is trading right now at 26.18, up $1.17 in this market. To be up 4.68% is a very good sign of strength. I am looking at the candle of the 15th of February, and it's way below that low, and that low is at 28.71. So all I can say is that I like the action on the daily. I like the action at right as we're speaking of the weekly. If it closes under 25.70, I won't like it. If it closes anywhere here, I will like it. And I like the fact that the monthly has had a very concerted move to the downside to a trough F, and is very steadily trying to make higher highs, higher lows, with the technicals concurring. So I think this is in play if you're long. And it was who in the den that asked me about it? I forgot to write down who it was. CLF, I'll try to find it in the meantime. I just can't do it right now quickly, but at the break I might be able to. Yes, I like it, and if you're long, J&J. Yes, if you're long, stay long. If you aren't in it, it's a little tough just to say grab it right here, but what I would say is you could nibble right here at 26.19, just nibble with a 1 1/4 point stop, but 25.80 is the key level to hold, and then I would add if it holds that. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman, Tiger Technicians out. Dow's down 5, S&P's down minus 1.04. And a couple of things. IWM was the other question. I'm calling this a peak D. I've tried to give different counts to it. I'm kind of comfortable with the D right now. That allows it to still go to maybe an E and an F, and that's based on the 120-minute chart. I really haven't been able to give any other notation to the 120-minute chart. It's made everything looks like it's made some kind of a D, but I've got it as either a B or that phantom peak I spoke about yesterday as maybe a C with one more pop to the upside. So maybe there's a consolidation taking place in the IWM right now. One of the reasons why I said that I anticipated that somehow or other that we will end the day with either a doji candle or a slight bout of weakness is that if you look at GE right now needs to go to leg D just above 27.96, so 27.97 starts D. This is still C. It's almost the same as the IWM. Is this C in the 120-minute chart? It's only why I feel comfortable counting it right now. That's just the way it is. And it's leg E in the weekly and leg E in the monthly. So there's still room to go to the upside. IBM, this is part of my Dow Quartet, and look at the Dow Quartet. You've got this incredible move in IBM that went to 186.50 today. The last recovery high, B, in the weekly chart was at 185.22, 185.24. Excuse me. Yes, that should be 24, 185.24. Just as well, I always check these things. 185.24. And it's gone higher than that. But in the buy mode, it went below the previous buy mode. No. You remember IBM? It held it. 172.57. Yeah, 172.57. Let me type that in. 172.57. And the other one was just a tad higher, wasn't it? 152.73. I did remember that. 172.73. So, yes, this could be an E because it did not break the left side low. I think it's B, and I think it's going towards the 200-period exponential moving average, which is at 188.39. I think IBM still has strength. So, GE still has strength. IBM still has strength. Triple M? Oh, and besides which, you remember that pattern that I talked about in the that's showing up here in the weekly chart, the same as the weekly chart that I spoke about with with natural gas and a number of other charts. Successful test of the left side low. So this, in fact, I'm going to call it, to be safe, just to call it C. And that's a counter trend rally. It could go to D, but the fact is, if it closes, if IBM in the next, by Friday a week, closes above 186.24, that'll be very positive. So the weekly chart is good. The monthly chart has that Chapman Wave flat base restart. Remember we spoke about that? Very good example of the Chapman Wave flat base restart, which says you can take out that arch formation low, but if you are successful in holding, you can break out and you can move to the upside for a pretty decent bounce, and that's what I think IBM is having. So let's go to Triple M. 1, 2, 3. Triple M. Triple M is now at an all-time high, right as we speak, at 139.23. Multinational conglomerate, 3M company. Move this over. Move over, buddy. That's a floating. Remember the Chapman Wave methodology? It's a very simple technique. It's a floating ladder. That floating ladder now moves over to the next high bar. That's this month. Let me get rid of that number because it's not needed anymore. And what do we have? We have F/B in the daily, in the weekly, and you have E in the monthly, and you have D in the daily with tremendous strength at 92% in the stochastic, and the MACD is expanding still. Triple M is looking great. UTX. It could be a G. I've put in an up arrow. I'm calling this A. Now this is really strange. If United Technologies is in leg E in the monthly, leg GB, A, B, C. So this is a brand new buy mode. Good, I love this. So here we go. A, B, C, leg D in the monthly, in the weekly, and possibly A in the daily. It says there's a chance that I hear a break coming up. There is a chance that we could not get a peak D in UTX for at least another 6 sessions at minimum. Wow. I'll be back straight after this break. Dow is up $1.38. S&P is down 50 cents. Basil Chapman, Tiger Technicians Hour, 877-927-6648. I want to talk a little more about real estate.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So this is what I want you to talk about. In the big real estate crash that occurred around many parts of the country, the Boston area held really well. Yes, there were places, and there certainly were individual cases that were very, very weak. But basically, some areas didn't see more than a 10 or 12% decline, and some maybe went to 18%. Some of them might even be more, but it was really isolated cases. Most importantly is that the market held extraordinarily well. And in my experience being here in Boston for a very long time, whenever there was a market crash, there would always be a real estate crash. That changed in 2000 when the NASDAQ dropped 90% and real estate started to make a huge move to the upside. Now, some of you might recall that in the Boston area, for those of you who live, say, in the New Hampshire area of Vermont, remember around the lakes, Lake Ossipee, Lake, what is it? Those various lakes in New Hampshire, you'd be looking at projects that were, houses were just torn down and projects were started and just left. You'd be driving in the wintertime, it would be desolate and partially ripped apart places, or they hadn't been finished, and it was unbelievable. It was like something had hit it, like a tornado. It was terrible. You remember there were banks in Boston that went broke or went down to 50 cents, and it was a terrible time. So this was the very first time that I ever saw real estate, and I think that historically, if I go back, I could not find another period with the data that I could collect where in fact there was basically a market crash, and people decided that real estate would be the place to go to as a safety measure. Well, when the real estate crash in various parts of the country occurred, the Northeast, and I believe to a certain extent the Northwest, and maybe isolated parts of the country, held very, very well. Now, I believe that to me, if I look at that in a market-related scenario, like Winnipesaukee, thank you, JP Realtor. Yes. So if you're looking at the historical content and value and the relationship of rent to the cost factor, I'll continue to say, just as long as I'm around, I'm going to continue to say, if you're in the business and you understand the business, nobody should be telling you anything, because that's what you do. You'll be able to find the bargains. You'll be able to find and do everything. Well, I'm just talking generally. And I'm looking at this and I'm saying, with the news, I study the media very closely, the trends watch part of it. And I can see a trend now that's gone on long enough that finally I think that there are a lot of people in their 60s, 70s, maybe 50s, late 50s, who are saying to themselves, maybe we should sell and go and rent or just get a smaller place, downsize. So I would not be surprised if this spring you actually do see a great deal more inventory. Well, in real estate, the more you have, the greater the competition for pricing. And the less you have, the greater competition you have for, in this case, buyers, and in the first case, it would be for sellers. So I'm looking at this and I'm saying, I'm going to give a little bit of a market outlook right now. If I'm correct in anticipating that we're about to get maybe it's in the first quarter, I'm not yet sure, timing-wise, I don't know. But I think we're getting very close to an extremely overbought situation in the stock market. And I think we're due for a 12% or more correction. But there is a chance that we have an entirely new cycle to the upside in the stock market in 2014. Now, what does that do to real estate? I'm trying to tie this whole thing together. What it says, when the stock market goes higher, invariably, the very good real estate tends to hold its prices or go higher. The very weak real estate takes a little longer, but there are still buyers that filter in and out. So the very best, and I'd say this a long time ago, I would not be surprised when it's announced that there is a house that's being built or for sale or whatever that is just knocks the socks off everyone. It is basically a Manhattan skyscraper for sale. That's the price. And that's going to be the tip-off that we have reached the period of excessivity. And that could coincide with that whole thing I talk about, skyscrapers, etc. And that's in 2014. So I think we're in for an extremely volatile, a very, very exciting period. I'd spoken earlier on about the rotation, that it should include the heavy-duty cyclicals. We've been in some, but we've also missed opportunities in some area. We're in one particular area which has done fabulously, still doing very well. I'm looking at this and I'm saying to myself, when people say it's different this time, but they're really parroting what other people are saying. It really doesn't mean anything. But there's no way that one cannot say that it's different this time, because you've had the Fed. You've never had the Fed before. But that is only one element. The real element is that earnings have been better. There are a lot of things that have been better. That Bernanke, in his own way, achieved a great deal of what he was out to do. How this unwinds at the end, that's another story. That's a different tale. So let me just sum it up. Real estate in selected areas, I still think, has a little bit of a way to go. For flippers, well, if you're a flipper, if you know your market, that I don't see a problem there. But if anyone, and I'm going to once again say that if anyone, a young person, if young people are listening, and I think, what do we do? If this is the place you're going to live in for 20 years or 30 years, does it matter what you pay right now? If you feel you can afford it, if it's the place you desire, if it's near your family, whatever, if it has all the requisites, that's the only thing that should really count. This is different to speculation. You're not going to look every day in the paper and say, oh, our house is up 1,000. Whoops, it's down to It's got nothing to do with it. If that's the place that you love, go for it. That's where you're going to live. Doesn't matter can anybody really predict the future by saying you buy it now, you're in trouble in 5 years' time? It's not the point. If you love it and you're enjoying it and you can afford it, that's the only thing that counts. That's your life. That's different. So I think that areas like Brooklyn, I think there's still some room to go, but I think it's becoming extraordinarily toppy. When I say toppy, I mean that all the benefits of that whole walkway along the waterfront, all the things that could be great, I don't think are going to turn out to be quite as great when you see 10 brand new 40 or whatever story, 20 to 40, I think they talk about new story buildings coming up. And as far as rent is concerned, you're going to be paying now, you're going to be paying top dollar for the tiniest little place. And to my way of thinking, in 5 or 6 years' time, you'll be looking at bargains in the rental place. So I just wanted to get that out. Just talk about it in general concepts, and then specifically talk about it market-wise. And if I'm correct, that we will get a pretty damn good pullback at some point this year, and that's going to be the pullback that scares everyone silly. And then there's going to be another rally to higher highs. Wow, this is going to be a fascinating year. We'll see. Okay, so enough with all that blabbering. Well, let's go straight to what I want to look at, the IYR. The IYR trading, this is the iShares Dow Jones U.S. Real Estate Index Trust, I think has made the same top as the gold market in the monthly. That was a peak D-top at 76.21. We're making the H formation right now. That means that the weekly chart has got a much deeper H formation. And if the weekly chart takes out, well, 6150 is the 200-period moving average. If it takes that out and then takes out 60.92, the low of the week of August the 23rd of this year, that's going to be a big negative, closes under it, I should say, because that's going to say that has turned what should be the basing area into a transitory move that says, oh, be careful, because 58.88, the low of the week of the 6th of August of 2012, that whole area, let me just type it in right here. Let me just show you. Right here, right across. That will turn out to be a very important metric. If that's taken out, we're looking at something very different in the monthly chart. I can only say that based on the daily chart, it's at 62.87, down 28 cents. If in the next 3 weeks, give it 3 weeks, there is a close above 64.50, 65.44 will be the 200-period exponential moving average, and all of a sudden you get a change in this particular chart formation. So now I want you to do that. If you look at SPG, Simon Properties, made a peak E in the daily. It's just making a cup formation in the weekly. And the monthly chart has that same pattern. This is a Simon Property Group trading at 152.64, down from 159. I'm very cautious about this. Oh, here's the other thing. Thank goodness I reminded myself about it. Route 9 in the Chestnut Hill area of Boston. For those of you who've been around this area for a while, you'll know that there's always been talk about how terrible the congestion is with the traffic, and they've held off any building, just like they did on Needham Avenue in that Newton Highlands part that goes to Needham, very well-traversed artery that goes to 128. They did the same thing then, and then they built this huge complex and a McDonald's. So your local government invariably will eventually be pushed by real estate conditions and what they perceive as the best income possible to be able to buy all those new things and be able to pay all the different departments. That's exactly what happened here. Route 9, if you drive along and you are looking, anybody who has not been to Boston for about 2 years, not even, let's call it 2 years, you drive along Route 9 in that Chestnut Hill area, you will not recognize it. It is a hub of shopping malls. There's that Chestnut Hill Mall, built in 1974, great mall, fabulous mall. When they refurbished it a few years ago, I thought, oh man, what are they doing? I used to love it. They did a fabulous job. Well, it took over the atrium. The atrium now is going to be offices and medical. It just failed. I always talked about, you remember on the show, I used to talk about the parking at the atrium. I used to say that the architects, hell must be if the architects have to do that 24 hours a day, 7 days a week, 365 days. They have to go and park their car 6 times a day in the garage of the atrium. Anyway, so all of a sudden, you've got these huge complexes being built. It is amazing. Talk about complexes. Talk about a complex where you're paying $28 a ticket to go see a movie so you can have a meal at the same time. Things have changed. The period of excessivity that I spoke about a long time ago is unfolding, and it is starting to move at an exponential rate. That, to me, is important. And I think that's really what the real estate is saying in terms of these REITs, that a lot of them are just, they look stuck to me. And not in this particular time period. I don't think they should be stuck. And look at this PSA, public storage, peak D in the monthly, peak D in the weekly, way down at 150.84 after hitting the 170s. 176.68 was the high. Look at Vornado Realty, one of the big ones, VNO, makes a peak. Oh, this is held very well. Vornado's holding well. It's an E in the monthly chart. That's not the all-time high. No, the all-time high was back in July of 2011 at 97.77. So it's in a sideways move, holding quite well. But at the same time, I've got a peak C in the weekly. There's still room. It could go to new highs. A peak D in the daily, but it is holding very well. One of the few that is holding very well. Let's look at Annaly Capital Management, NLY. There's the break. NLY way off the lows at 9.81. Oh, I shouldn't even include it at $9. Equity Residential, EQR. This is part of the, these are the top holdings in the IYR. Yeah, way off the peak D high in the 65 area, trading at 51.69. I'll be right back, folks. Basil Chapman, Tiger Technicians Hour. We'll take some calls. Hey, how about some calls?
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. We're going to go straight to our first caller. We've got Dennis in Tampa, Florida. Hi, Dennis. How are you?
Good. How you doing today, Basil?
Very well, thank you. You'd like to look at?
I'd like to take a look at Twitter today. I've been long on stock for a little while here, but there hasn't been a lot of history on the stock, so it's kind of hard to chart it. So wanted to get your take on it.
Okay, let me just go through it. We'll talk about strategy in a moment, but let me just say that the daily chart is making peak D as we are talking right now. Excuse me. That's the high of 74.73. Let me type that in, 74.73. The weekly, this is the first big move it's had. This is leg A. And theoretically, it should still go to a B, a C, and a D. And the same thing for the monthly. That's the history of IPOs. But there's one big difference. I tend to say that in a monthly chart, not the weekly, but in the monthly chart, I want to know that the IPO is capable at least of getting to a strong leg B. Then I always feel, now I can say that it should go to a C and a D. So I'm going to skip the monthly for now. It's a long time in a monthly to talk about D. It would have to take us right into the July, maybe even August period before you could get a D in the monthly. So let's exclude that for now. Okay. If you look at the weekly chart candle that's forming right as we speak has the price at 67.76, exactly in the middle of the candle of last week. And the kind of candle that we're looking at, a long-legged doji candle from yesterday, says that there is a chance that even though Twitter should pull back 67.20 to 65, what was the low there? 65.56 should be some containment area. But because of the speed that it's run up, I would not be surprised if on Monday, it's down 561 right now, down 7.65%. I didn't realize that. I looked at the candle. I should have immediately said, hey, that's a big number. So it's at 67.75. Yesterday's high was 74.73. I'm not sure what the story is, but after a big move...
There was a downgrade on the stock.
Okay, downgrade on the stock. Now, let me ask you two questions. And first of all, I wanted to say, the way I look at Twitter, if Twitter is able to hold the 65 to 63 area over the coming, what is today? Thursday. No, today's Friday. All of next week, if it holds that level, and even if it just bounces once back to 69, somewhere around 69, to me that'll be a sign to say, okay, now you can look at the weekly a little differently. If next week Twitter, I don't care what the reason is, if Twitter takes out $63 support and goes down towards the 62-ish area, I'm going to have to look at the weekly chart and say, wow, that kind of vertical move to the upside in leg A. I don't know if you know that, how I always talk about a single leg A up becomes very vulnerable. If it gives back more than 50 to 60% of the gain, it can actually give back all the gain. I don't think that's the case with Twitter. I'm just saying that's the technique I use. So right. I don't know what price you were in, but I'm going to make the suggestion that if you've got a very healthy profit, it doesn't hurt to take something off right now to say, I ran with Twitter almost all the way to the most recent high, all-time high. I'm going to take something off, and that amount of money I can consider putting back if certain conditions are met. So I wouldn't want you just to say, oh, great idea, and just quickly do it. But there's the break. So my thinking here is that if you want to take a little bit off, I would take it off as a reward, because the way it's acting, it looks to me like on Monday this thing could quickly hit 65 before it has a bounce. And then I would be looking to put that money back and try to get it in about the 63 to 65, maybe 63 area, but I'd wait for it to get some support. Hope that helps you, Dennis.
Thanks a lot, Basil.
Thank you. And Mike, call me Monday. We'll talk about
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.